inflation objective to 2% a year from zero. I think that I think that if you tell your people that you're shooting to depreciate your currency at 2% a year, that has a lot of implications. Although it feels good to a lot of people. A lot of people want a little inflation, but nobody wants a lot of inflation, except somebody's got a lot of debts.
We are in my opinion, we are at the beginning of a very classic late big cycle debt crisis, when the supply-demand gap, when you're producing too much debt, and you have also a shortage of buyers. What's happening now, as we have to sell all this debt, is we then do have enough buyers. There are changes now in terms of the quantities in the world that are being held by large investors around the world that have lost money in these treasury bonds and so on. And then there are geopolitical changes which are having an effect.
One of the most interesting figures to me is currency in circulation. I mean, it is gone. They were saying cash is trash back in 2007 and 8, and all of that cash is going to disappear. Well, if you look at the Federal Reserve balance sheet, it's gone from $800 billion to $2.2 trillion. And most of that's in $100 bills, overwhelmingly. And if you figure it out, I think there's about 50 $100 bills per person, babies, everybody in the United States. And I would really like to know where all of that is.
Although the amount of money in your bank account is a reflection of your financial status, it is only one aspect of your overall net worth. While depositing cash in a bank can generate interest, current bank interest rates struggle to keep up with inflation, putting you at a disadvantage. Therefore, it is essential to search for assets that outperform cash. Legendary billionaire investor Warren Buffett has identified the assets currently more valuable than cash. These assets not only retain their value but also have the potential to increase your wealth.
Well, by far the best investment you can make is in yourself. I mean, for example, communication skills. I tell the students that come that they're going to graduate schools and business, and they're learning all these complicated formulas and all that. If they just learn to communicate better, and both in writing and in person, they increase their value at least 50%. And, I mean, if you can't communicate, somebody says, it's like winking at a girl in the dark. Nothing happens, basically. And you have to be able to get forth your ideas, and that's relatively easy. I did it myself with the Dale Carnegie course. Some people wish I'd taken a shorter course now in terms of my talking later on. But it's just hugely important. And if you invest in yourself, nobody can take it away from you. I mean, you get exactly one mind and one body in this world. And you can't start taking care of it when you're 50. By that time, you'll have rusted out if you haven't done anything. So you should really make sure that you just remember that you just got one mind and body to get through life with and to do the most with it.
First, you are always the most precious asset, regardless of the circumstances. It's important to recognize that you are an invaluable asset. Your unique skills and talents are worth more than any amount of money. While money can be lost or taken away, your rare abilities set you apart. Instead of depending solely on the success of other businesses and following their lead, consider offering a service or creating a product that only you can provide. There are countless opportunities for you to create and develop your success. Take a moment to think about the many possibilities available to you rather than investing in someone else's enterprise. Be inspired by successful individuals who have turned their skills into thriving careers and fortunes. Have confidence in your abilities to achieve your aspirations.
Balancing concerns about the Finch downgrade and higher and pesky inflation, both in energy and food, is a big issue around how much money we're going to print. That's close to $1 trillion. That's money we're going to be printing. And where's it going? All into the S&P 500. And these are big sectors in tech and all kinds of initiatives around construction. And whether you think printing money helps or hurts inflation, I personally think it increases inflation.
Let me give you a figure that'll blow your mind, I think. I bought my first stock when I was 11 years old. It was the first quarter of 1942, shortly after Pearl Harbor. I spent $114.75. Three shares, $114.75. If I put that 114 into the S&P 500 at that time and reinvested the dividends, think of a figure as to what it would be worth today.
Oh man.
Well, it's
okay.
I just want your audience to think for a second.
Okay.
The answer is about $400,000.
Oh.
So if I, as a little kid, had taken that $114 I'd saved on shoveling snow or whatever I'd done, $400,000.
Warren Buffett thinks investing in the S&P 500 index is better than retaining cash because of the possibility for larger returns and the strength of compounding. The S&P 500 index has traditionally generated higher returns than a typical savings account because it represents a sizable and diverse segment of the U.S. stock market. Including dividends and capital gains, the S&P 500 has returned an average of nearly 10% annually since its inception. Shares of an S&P 500 index fund can be purchased as an example of passive investing, which does not require in-depth investigation or evaluation of specific companies. This makes the procedure easier for people who don't have the time or desire to manage their funds actively. Investing in the S&P 500 index fund means diversifying your investment across 500 publicly listed American companies. This diversification reduces the potential losses from the poor performance of any one business or industry. Many S&P 500 index companies offer dividends, which can be reinvested into the portfolio to raise its value or used as a source of income. Long-term S&P 500 value growth has been consistent, providing the opportunity for significant financial rewards. Your investment can grow exponentially due to compound interest if you reinvest dividends and ride out the long-term trend of rising prices.
Now, so I use debt as money, and I don't save cash because in 1971 the dollar became debt. Tricky Dick Nixon took us off the gold standard. So at that point, I save gold. So all the money I make, if I buy something with debt, so that's I'm $1.2 billion in debt, because if I go bust, the bank goes bust. Not my problem, you know what I mean? And all the cash I make is I convert to silver and gold.
In the 1950s, an ounce of gold was worth approximately $40. When adjusted for purchasing power, $1 back then is equivalent to about $12.68 in today's currency. Therefore, an ounce of gold during that time would have been worth around $400 to $500 in today's money. However, in 2023, its value has increased dramatically and now stands at around $2,000. Based on various predictions, gold prices are expected to increase significantly by the year 2032, with estimates ranging from $3,000 to $10,000 per ounce. Therefore, while cash value decreases, precious metals value keeps increasing. If you want to add gold exposure to your portfolio without buying physical gold, investing in gold ETFs is a great option. Investing in gold ETFs is a cost-effective way to benefit from changes in gold prices without owning physical gold or raw materials. Precious metals are considered valuable not only due to their scarcity but also because they have practical industrial applications. As such, they are essential commodities. Take the example of silver, which is extensively used in producing electronics, medical equipment, and nuclear reactors, among other things. Similarly, metals like nickel, cobalt, and copper are in high demand due to their unique properties that other materials cannot easily replicate. In recent years, the demand for cobalt has surged, primarily due to its crucial role in producing batteries for electric vehicles. Despite the recent decrease in cobalt prices caused by a rise in supply, there has been a significant surge in the price of cobalt from $22,000 per ton in 2012 to more than $60,000 in 2022, indicating a more than 200% increase within a decade. Therefore, investing in such raw materials can significantly enhance your portfolio during high-demand phases. Investing in raw materials can be challenging if you lack the resources to store and sell them. However, you can still gain exposure to the mining industry through other means. Consider investing in mining-focused stocks like Rio Tinto, BHP Group, and Barrick Gold. This type of investment can be a low-risk option that diversifies your portfolio. Companies that produce raw materials often perform well during strong economic periods, making them an attractive investment opportunity. Additionally, many materials sector firms offer reliable cash flow and regular dividends to investors. By investing in stocks from those companies, you can potentially benefit from the market's growth.
Bill Gates, business magnate, software developer, philanthropist, nation's largest farmland owner. Yeah, you heard that right. Gates owns nearly 270,000 acres of farmland in the U.S. Who knew?
The land has always been considered a non-depreciable asset. It is scarce and always in demand, making it one of the most valuable resources in the world. As the human population grows, the demand for land for various purposes, such as homes, schools, factories, agriculture, and commercial spaces, only increases. Additionally, the demand for residential homes, office spaces, and commercial properties built on this land remains high. Therefore, investing in land and real estate can serve as excellent inflation hedges in your investment portfolio. According to a Bloomberg study, housing prices have tripled from 1992 to 2020, despite a significant decrease during the 2008 housing bubble. Having real estate exposure can come in handy when the value of the dollar depreciates. However, many small investors only consider investing in real estate much later in life because they associate real estate with only owning a home, which is typically a net worth goal for those in their 40s. It is recommended to have a slice of the retail property market at every age, as it can provide valuable benefits. Contrary to popular belief, you don't need much money to invest in real estate. You can opt for real estate investment trusts, REITs, which function like mutual funds for real estate. One highly sought-after REITs in the U.S. is Realty Income, which was founded in 1969 and is one of the first REITs in America. Realty Income has survived and thrived through 7 recessions, 12 bear markets, and dozens of corrections and pullbacks. Its business model is considered to be one of the most beneficial in the country. The company functions as a financing entity that purchases independent buildings from companies such as Walgreens and subsequently leases them back for 15 years. For normal people like us, alternatively, we can also take out a loan to purchase rental properties. By doing so, our rental income can cover the mortgage payments and expenses while generating profits. In today's world of fiat currencies, where no currency is backed by gold, geopolitical stability is crucial when investing your money. That's why many wealthy individuals choose to keep their money in Swiss banks. Switzerland has one of the strongest economic systems in the world, providing a more stable geopolitical environment. The Swiss franc is often considered a safe haven asset during times of turmoil and instability. This has been demonstrated during events like the Eurozone debt crisis in 2009 and the global financial crisis in 2008 when people moved significant amounts of money to Switzerland to prevent wealth loss from currency depreciation. Additionally, the Swiss franc can be used as an alternative to the US dollar for international trade. The use of the Swiss franc for trade by parties involved in the recent regional conflicts in Europe caused its value to increase significantly, resulting in sudden wealth growth for Swiss franc holders. Superior currencies, such as the Swiss franc, British pound, are excellent for storing value. However, not everyone can open a Swiss bank account. Currency ETFs and online brokers can help smaller investors gain currency exposure with as little as $100.
Berkshire bought $10 billion in U.S. Treasuries last Monday. We bought $10 billion in Treasuries this Monday. And the only question for next Monday is whether we will buy $10 billion in 3-month or 6-month T-bills.
Since the abolition of the gold standard in 1971, the U.S. government has guaranteed the U.S. dollar as legal tender for all debts. Although not backed by physical assets, it's still considered valuable and backed by the government's full faith and credit. The stability of your money depends on the stability of the government that supports it. Investing in sovereign guarantees can be a secure way to preserve your wealth. Governments rarely default on their debts, as it could lead to a catastrophic economic collapse. Therefore, investing in government securities can be a wise choice. However, it's important to choose stable governments with good credit ratings. The 2009 sovereign debt crisis in Greece demonstrated the risks of investing in unstable governments. When investing in the U.S., Treasury bills, notes, and bonds are good options for exposure to sovereign guarantees. Investors can invest in Treasury securities directly through the Treasury Direct portal or the secondary market. These investments are supported by the U.S. government's strong presence in the global economy and offer better returns than cash, although they are less risky than stocks. When the market is unstable, it can be difficult to decide which assets to include in your portfolio. However, having information about these options can make the decision easier. Investing in these assets doesn't require complicated processes. By adding them to your investment plan, you can explore various opportunities to protect your wealth and become rich. Remember, you are your most valuable asset, worth more than any amount of money. Embrace your unique skills, seize opportunities, and make your mark on the world. With perseverance and self-confidence, there are no limits to what you can achieve. We suggest taking a few minutes to watch the videos on our channel and discover the transformative power within yourself.
We appreciate your watching. Please hit the like button below if this video helped you in any way, and don't forget to subscribe to the channel. Thanks again and see you next time.